it's now become clear from the forward-looking data, the fully fed and everything else is just showing it. But if you start to look at the really forward data, like the new orders component of all the regional Fed surveys, they're pricing things like ISM at 35. These are shocking declines, which I've been trying to tell people about. Is economic growth over the next 3 months is going to shock people to the downside, and it's going to change everybody's narrative from, okay, we're in this sticky inflation environment, there's supply constraints, to, oh my God, we've broken the economy.
Hey guys, welcome back to Library of Wealth. Today we have the CEO of Real Vision, Raoul, talking about the unforeseen changes coming to the crypto industry. Powell is expecting a major shift to the ISM, surprising many people. This will change the positioning of the markets, which are still relying on short and underweight bonds. He says people in hedge funds are now extremely underweight in equities and cryptocurrency. The dollar is the other crucial variable, as we're now in a pure macro environment. If the dollar will either move another leg higher or will correct a little while longer. Let's check out this interview with Raoul as he gives us his take on the rise of crypto. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Expecting ISM to either hit 50 or even go through it, which would kind of surprise people. But I think it goes below 40 in the next 2 to 3 months, which is not what people are expecting. And that changes how the markets are positioned. So the markets are very positioned, still short bonds and underweight bonds. People are massively underweight equities now, and they were and still are underweight crypto. And that's not the general public, but that is people like crypto hedge funds, massively underweight. Some of them have so much cash, and people are still overweight commodities. So, and the dollar's been the other key variable. I mean, there's a lot going on. This is a pure macro environment. I mean, it's all about macro right now. So the dollar's been screaming higher. It's kind of stabilized a bit for now. It's not yet clear to me if the dollar moves another leg higher now, or we correct a bit longer and then move higher. Don't know. I imagine if growth implodes, the dollar moves. The dollar is already pricing ISM around 45, so it's already pricing a full recession, but I think it's going to be bigger than that. So I think the rate of change in the dollar goes further. So that's still a wrecking ball, still to keep playing out over time. I think there's still washouts to come from the energy sector and others. Doesn't mean we go all the way back to the pre-levels where many of the markets have got to, but we're going to retrace a lot more of that. My base case is that oil comes down somewhere between $80 and $60, to $80 and $60. The equity markets are somewhat more complicated because they're already pricing in, the S&P is pricing in ISM around 45, so there's a bit more room. The NASDAQ is around about 40, so it's pretty much priced in what I think is coming. My forward-looking indicators, which I'll show in a minute, will suggest that the bottom of the economic trough is like March next year. But I think stocks bottom first. So in 2018, they bottomed a year before the economy. In 1974, these are the parallels I've been using. It bottomed 3 months before. So it's somewhere between that. So I think they bottom in the next few months, or they have bottomed, which is contrary to what most people think. If they price in the ISM properly, there should be another leg lower, and that should be the final leg for me.
Powell has noticed that crypto has started going up, and many tokens have risen up to 100% in the past 2 weeks. Cryptocurrency has become overbought, even though people were expecting it to go down a leg lower like equities have. He has also seen that certain patents have now been put in, which is only a short-term correction. Powell believes that we aren't going to retest lows based on growth, but that we'll have more sideways consolidation.
Corroborating evidence is that crypto started going up, and many of these tokens have risen 100% in a week and a half or 2 weeks. Now, they broke these patterns where everybody was expecting another leg lower, much like they are in equities, which makes me slightly suspicious of equities, which I don't like being short. But crypto did really well. It's now overbought. We're putting in like DMARC 9 patterns, which tend to be a short-term correction. Now, do we go back to retest the lows based on the growth numbers and other stuff? I don't think so. I think we're more sideways consolidation than another rip higher, but it's not clear to me. But I think the base is in, and I've been saying that for a while now, because crypto is a very forward-looking asset, and it will look further ahead than anybody else, and it's sniffing out the change in bond yields. So that brings me on to the most important part, which is bond yields. Bond yields are now rolling over. As I've been forecasting, they're about to break a head and shoulders top pattern. So, Brian, if you can show the head and shoulders top pattern, which is this chart here, 275 in 10-year bond yields. If it breaks that, then we should start to go down below 2%. I think somewhere around 175. So that's not what the market expects. But if you think of what that does to growthy assets, it's taking down the future discount rate. And if that means that inflation is coming lower, then you're taking some of the inflation expectations out. So things like what I refer to as the exponential age stocks, the further out the growth curve, things like Scottish Mutual Trust in the UK, which I've just interviewed on Real Vision. They're amazing, some of the best tech investors in the world. They're going to be coming on, but also, you know, whether it's the semiconductors, whether it's ARC, whether it's robotics, and all of this that I've got a whole basket of.
Powell says that crypto is a very forward-looking asset and is uncovering the change in bond yields. He says that all bond yields are now rolling over and has predicted that they're about to break a head and shoulders top pattern. If the 10-year bond pattern yields, we would go down below 2%, which the market is not expecting. But if the pattern does break, it would be taking down future discount rates, and it would take some inflation expectations out of the picture. Powell states that all exponential age stocks, whether it's ARC, semiconductors, or robotics, will all begin to stabilize. The Dow Jones Industrial Average rose barely beyond break even, while the S&P 500 moved up to just 0.1%. Both benchmarks alternated between gains and losses. The Nasdaq Composite decreased by around 0.3%. The actions come after a dramatic recovery on Friday when the S&P 500 rose 3% during the session and nearly 6% for the week overall, marking its second best week of the year and its first weekly increase since late May. However, the benchmark index is on track to have its worst first half since 1970. Macro investor Raoul Powell says that in fact the economy is broken. With the recessionary indicators along with increased interest rates, we're on the verge of an economic meltdown. What do you guys think about Raoul Powell's opinion on the crypto market and bond yields positively affecting inflation? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.